It is Thursday, August 8th, and this is our Insider Access briefing. So we have a short briefing tonight. I just wanted to go over some sequencing items and take a look at the general markets. And our views continue to hold put rather. And I just wanted to zoom in on this, and it is what it looks like. And I noted this in Discord today. We've had some alternating days, and this is just a classic pattern of up and down, but what you're noticing is higher highs, higher lows, higher highs, higher lows, right? And it doesn't necessarily have to adhere to that exactly. But while we've had alternating days, the markets have done really well. And you note that we bounced really hard off of trend. We not only bounced off this short trend, we bounced off of around yesterday's open. And it was meaningful and a positive to see more than anything is a recovery towards a late day. And so the recovery towards a late day was rather sharp, and we closed down ever so slightly. Ultimately on the day, only 5 points. So again, a lot of these days, as I've noted, tend to look a lot worse or more dramatic on both positive and negative than they actually are. And when you take a look back at the sequencing, that continues to work in line with what our projections are. We believe the markets will continue to push up higher. And today, in terms of data, really didn't get anything substantive. Although the weekly jobs data and the weekly jobs claims likely in here. I always have fun sifting through the Thinkorswim data, but the weekly jobs data was actually very muted. But the point on that is that we didn't need it to be anything specifically remarkable. And in that regard, it simply undermines the non-farm jobs report, right? So effectively, what you were looking for, if you wanted to see support from the non-farm jobs report, is at some point, we should have seen a big uptick in the weekly jobless claims. We continue to not see that. And that in and of itself is telling. And I think that it's clear the markets have turned the page, and it's not even really a conversation anymore. And I noted this to insiders, it's that, look, if you're now just joining and saying, it looks like the jobs report was erroneous or the markets don't care, well, you missed a lot of the move because we're up a couple hundred points from where we started. And in Insider Access, that's why it's so critical for us to have the sharpened lens, the institutional lens, to see what's really going on behind the scenes, because that's ultimately how the markets took it. More important on the macro stage today, President Trump has named Fed Governor Adriana Kugler's replacement, and that is Steve Moran or Stephen Moran. And there's just a couple of things I wanted to bring up in that regard. So you might wonder, well, what is his position? How is he going to vote? What are his ideas? Of course, if he's named by the president, he's going to align his views with the president. But I did a little bit of digging, and we took a look on our research team, just peeked into his tweets or his X posts. Hopefully Elon Musk is not an Insider Access member. And just some things that are pretty telling. This is from July 23rd. And he noted that if you constrain supply through aggressive regulation while stimulating demand, you get inflation. If you liberalize supply through regressive deregulation, you get strong disinflation or even deflation, holding all else other steady. And it's a major mistake to consider only the demand side of the economy. Two things here. One, this is a very dovish view, because what he's saying is, look, the Trump administration is taking the shackles off of supply, and therefore it will be able to stand up to static demand or even a slight increase in demand. Two, put the politics aside. I won't comment on whether the Trump administration or whoever is doing whatever. We don't really care about politics. Economically, he's dead on. And this is something that fires me up. I've talked about it, and I've given private speeches on this. I've talked about it to clients. In fact, I talked to insiders and explained it to a lot of people on X or Twitter or whatever it was at the time when things first started. Of course, this is how basic economics work, right? And this is one of the criticisms on the Fed, who only control demand. And it's sort of this, you have to play a mental gymnastics game, which typically it's for political reasons or other nonsense. I was criticizing the Fed under all administrations, is you have to play some mental gymnastics to align with what the Fed do, because they have a dual mandate. But then when inflation increases, they say, well, what we're going to do is we're going to put people out of a job, right? There's the kind way of saying, or the diplomatic way of saying that is, we need to cool the labor market. What are you saying? You're saying you want to see unemployment go up and you want to see jobs drop. That's not supportive of an economy. That's nonsensical. But the only reason that even makes sense at any level to the Fed is because they say, well, if jobs increase and demand increases, then prices go up. And what Moran is, or Maron, or however you say his name, is explaining, is what I've explained, is basic economics is, well, no, if there's a commensurate increase in supply, then prices don't increase. So if people want to buy more cars, more demand, and we create more cars, then all else equal, price should be rather static. There will be a sufficient amount of supply to meet the demand, and the demand will not have an impact on the supply. If you get into a place where you're creating jobs that are not leading to creation and supply within the economy, that's where you start printing money and just giving everybody more money. Now you've stimulated demand, but there's not more things. Well, then the things will cost more because people will start bidding against one another, as everyone here saw with the housing market, right? There wasn't more houses. Houses just became infinitely more affordable. And so you just saw people say, okay, well, whatever. It's such a low mortgage rate. You say 500, I say 550. The other person says 600 because what people care about is what your monthly payment is. They don't concern themselves nearly as much, at least outside of this group. I know savvy investors here. They don't concern themselves with the absolute cost. They just say, can I afford the monthly payment? And so as you drop mortgages, the bidding ensues. So a very, while his view is very, I think, level-headed here, it's also one where he is sort of leaning into policy that supports the administration. And then I think where he really gets to it is he also touches on immigration, and he says, look, if there's more immigration and there's more people here, that's going to be more demand on housing, healthcare, and sluggish adjusting, and particularly if supply is sluggish to adjust. And he says, and this is on the 23rd, so he is taking the position, and he has been a staunch supporter of the president in the past. He says, we've adopted an extremely disinflationary mix right now. That's all you need at the end of the day, right? He says, we're in an extremely disinflationary mix right now. That means he sees right now as extremely disinflationary. So you don't have to guess at how he's going to vote or what kind of opinion he's going to express within the Fed. Effectively, we now have 3 members who are ready to dissent. We have 3 dissenting voices, and if there's not a cut in September, I think you're going to need some wild data to support that position. That's why we gave ourselves time. I'm not concerned about TLT short term. I actually noted this is one we want more time on the board, and that it may have some ups and downs. We may dip a little bit under, dip back over. On balance, TLT from now 8 to 12 weeks looking out, I think we push higher and higher. You now have 3 dissenting members. It couldn't be more clear as to what the new member's position is going to be. He's going to be very dovish, and the president is likely to name a successor to Chair Powell this week. It seems as though Waller is a front runner. There's a lot of options right now. So you can have 3 dissenting members and add an external voice that is also dovish, and that creates a lot of people on the dovish side. That's a fast, very rapid change. We were rapidly gone from 1 to 3 and a 4th on the outside. Or, he could potentially name Waller, who's already a dissenting member, as the next Fed chair. And I think that there's some strategy there as well, because then you have the next chair sitting in the room actively dissenting and actively undermining the current chair. So the scene is changing rapidly. And I think that the writing is on the wall here. Like I said, it's not as though Moran has cast his vote yet, but he's effectively cast his vote. So politics aside, we don't really care about that. You had to imagine that the president was going to appoint someone who agrees with him. What else would anybody do? This is what we get. This is going to be dovish. This is going to impact TLT. It's going to impact the 10-year rate and drive it down further. So that's something that we are actively in a swing trade for. If you're not in that, if you're new to insider access, this is an idea. 8 to 12 weeks out on options, 8 more aggressive, 12 gives you ample time. We see TLT running hot because the inverse is going to occur, as our view on TNX CGI. That's the 10-year yields. So that is a bullish idea. I want to recap a couple other ones just briefly and talk about the support for the markets. So let's get to one right away. Apple, red hot, knock it out of the park kind of trade. And this is one where, geez, did it ever take off in the after hours? So it's not as though we didn't get our chance here. I updated to, and I just sort of tagged this here. I updated to Discord this morning. I said, look, it's run hot. If we get a pullback into the mid 216s, that's our new entry point. Let's hit that. So you can hit it as a day trade, made a 150% move, or as a swing trade, absolutely on fire, guys. 5 points for Apple is ground shaking. If we just pull back here and sort of look at the last X number of days, here is a range that starts the end of June, right? Like let's just mark this the end of June and runs to, let's see here, August. And in that period, let's just say end of June to August 207 to about 213, you squeeze out barely 6 points for the majority of that period. Obviously running a little bit hotter here, but you could even isolate and just take a week here. You go 211 to 209, 2 points just over a week. You get the idea. Apple's not a fast mover and shaker. It's not a hyper volatile security. It moves in bursts. It moves post earnings. Obviously, big move down here, but huge move. And I suppose it doesn't really matter in terms of the historical context, such as to say absolute fire pick on our swing trade here. I adjusted that in this morning in Discord. So talk about bottom tick. I said, let's look for a mid 216s, around 216.50. That's the midpoint. Let's look for that entry there. And if we get into that zone, that's our new entry point. And if you hit there, on fire. If you didn't and you worked this at open, let's say you didn't get the update from Discord and you just took last night's video, I think you're in pretty good shape anyhow. On a 2 to 3 week basis, okay, hit the open, we're still flying. So we expect Apple to continue to do well and to pull the markets up. I would just say in terms of strategy with this swing trade, because we ate up a lot of that movement in the after hours, we did get that dip. Let's say you didn't get that dip, but even if you did, adjust your stops up. Make this a winner no matter what. Maybe you push to about 219. I'm looking at a potential bounce at 218.25 tomorrow if it does pull back, just as an intraday trade. I've got that listed on X, but if it doesn't happen, that should be a sides the point for insiders. We're strategically moving up stops on a huge winner. So what happens if, let's say you move up to 290, let's say it starts pushing and Apple gets up to 223 in the morning and you move your stops up to 221 and it pulls back. So it's not only that you get to nail the vast majority of the upside. Don't worry if it keeps running. Here's the other thing that happens, at least for some size, and we're going well beyond break even. This is a profits only trade. You have all the time left on your contracts, right? Theta is not going to erode the value of your contract day over day because this idea started today, right? So if it starts today, you're out tomorrow. If it continues to run and you're just adjusting your stops up, following it, great. We eat the upside, get massive profits. We're already in the hundreds of percents on the intraday trade, already on a big move on the longer term. Like I said, adjust your stops up. We got lots of time on the clock. If it yields, you take it and you make it a big winner. But yeah, absolute big winner. If you looked at it from a day standpoint, you entered the swing trade, even if you hit it at the open, whether you got the Discord notice or not. And from time to time, I will make those updates. Those sort of call those audibles. I think that's what they call it in football, where you sort of call a makeshift play. We'll call an audible from time to time in Discord and make those updates. We looked at TLT. We just looked at Apple here. Our other swing trade that's just running red hot. This is just a hit and run. Like I said, a little bit of a difference. Yes, we had a longer time frame on gold, GDX. Wanted to hit that as a breakout and just run. A little bit different from TLT. TLT will take longer to go. Same time frames, but different strategy, different approach. You can adjust your stops up, start adjusting. You don't have to be too aggressive. Give it a little bit of room to run. This is now a winner only. Yesterday, the update was, make it a break even only, make it a winner only, upside only. So we're on fire with the trade ideas here. We didn't get a signal out of the intraday trader on the SPY algo or QQQ algo today. It's fine. One way or another, didn't signal. We set it to be a little bit more conservative in the way that it's just processing some of the information because there's been so much chop in the markets this week. So, the signals we've hit really strong signals. Obviously, we had some big moves, but we didn't want to get caught in some of the chop. So today we're a little bit more conservative with the way that we played it. But hey, on our intraday trades, on fire, and our swing trades on fire. Oh yeah, we had Microsoft. I called a cut on this. We had a short bounce here at 521.75. Obviously, it looks a lot smaller here. I think we moved to the 1 minute chart. You get a little bit of a better look. It's got a bounce up for just over a point. So it got about $1 and change, $1.20. I called for a cut. You saw a little bit of consolidation, started to move back down. Take the profits and exit. I didn't like the way that things were looking. I made an update, and look, the update turned out to be absolutely perfect because the bounces got smaller and Microsoft continued to break down. And that's fantastic. When you have an idea like that and you're able to take a profitable, solid move and then exit and call it a wrap, what happens after that isn't a big concern. It's not like one that we're swinging. And then, of course, Apple here running red hot. This line, as a reminder, that's just for an intraday trade that we have tomorrow. May update that in the morning, see how it goes. But this is running red hot, gold running red hot. And we've given our breakdown. I think that it's not just the appointment of Moran that is going to have an effect at the next Fed meetings, the markets are reading forward, right? So his record and his comments on the record are not a secret. We're not the group doing our research. Obviously, the Furu community probably ignoring this, but I will tell you that the smart marks have already read through his history, know exactly who he is, know all about him. We have a pretty good understanding of who he is, what his views have been in the past. He wasn't a fan of the rate cuts back in September, but he had some decent logic for that. He said, why so aggressive pre-election? He questioned whether there were political items related to it. And, the argument that I prefer outside of the political side of it was where he said, it's not as though we've stimulated demand such that we can comfortably do this. So for him to now say, well, look, one of the reasons that I'm on board with this is because we're liberalizing supply through aggressive deregulation. Whereas in the past, he said, look, supply hasn't boomed such that we can get this aggressive. We know who he is. That's a more important thing. And it's the rest of the market knows who he is. So we'll start to see the markets price forward more and more. But I do think the markets are waiting just for the appointment of the next chairman, which should be this week. We think it'll be this week or next week. President Trump has suggested it will be this week. So we don't have very much longer to go. Maybe tomorrow. He may wait till after the bell. Seems like Waller is the odds-on favorite. But either way, the tides have shifted dramatically. And it was about 1 month ago where I said, get ready over the coming month. The knives are going to come out. We're going to see more dissent, more distancing from Powell, and a shakeup. We're getting that. That'll impact the markets. We maintain our overview on the overall markets here. We're still seeing an uptrend. There's nothing for us to suggest. Otherwise, again, as you note, alternating days up and down here. A good bounce from the lows. That's always positive to go into close on a rebound, recovering just under 50%, maybe more like 40% on the day downtrend. Only lost about 5 points. So we expect the markets to continue to push up. And if Apple's able to perform, that'll be a big boon from a company that's otherwise been pretty sleepy for the last little while. All right, guys, we're running hot. We will have much, much more to come. Have a great night.